Welcome back. On Tuesday this week, the CBN announced the restriction of forex access for the importation of dairy products to some 6 companies. Now, this is to achieve the twin objectives of reducing forex outflows and encouraging domestic employment. But with these restrictive measures to protect the value of the naira and reduce external imbalances, the research analyst at the financial derivatives company, Aisat Dawood, joins us now to answer this question and more. It's good to see you, Aisat.
Hi, good to see you, BC.
All right, so let's begin this conversation with you telling us what impact this measure is likely to have on fast-moving consumer goods sector.
So this is not the first restrictive measure and might not be the last one. Like you said, CBN's motive is to reduce our forex outflow. That is, our foreign external reserves have been depleting continuously and consistently. And this year it's been depleting on the rate at which now 3% decrease year to date. And now it's at $37.37 billion, which can barely cover our import expenses by the time we pay up our debt. By the time we pay up debts of about 20-something billion dollars, we have just barely $10 billion left, which can cover just 2 months of our import expenses. So this is a source of concern and worry why CBN has to exploit this option of restricting access to foreign exchange. So by the time they do this, we're going to have our big companies, our big giants to come back to Nigeria and think backwards, into backward integration, create domestic employment, boost our local production. So major objective is, bottom line is just for us to boost our local production of milk and take Nigeria to the top.
Of the 6 companies allowed access to forex for dairy products, only Nestle Nigeria is listed on the Nigerian Stock Exchange. And, of course, looking at the company's financial performance now, it's low in the 3rd quarter of 2019, and the stock price has lost about 15.5% so far this year. Is this trend going to continue, and are these measures likely to turn around the company's performance and investor sentiment?
Falling stock price is not peculiar to Nestle Nigeria. This is a general market sentiment. All through the previous year, we've had this negative investor sentiment that affected the market. And this FMCG sector is a sector that is very volatile relative to how the market trends. So if the market should trend downwards, FMCG sector will also trend downwards. And this is a sector that is very, very peculiar. Investors are not geared towards investing in this sector. However, the new measure is supposed to challenge the company to look towards and boost its performance. Hopefully, it can boost its performance and gear investors towards joining the company in backward integration and stop being conservative, because most of the investors are conservative.
Just before I let you go, Aisat, the federal government and the CBN have, of course, successfully intervened in rice and palm oil production. Should we expect a similar outcome with this measure in dairy products? And does this mean that Nigeria is towing the path of import substitution?
Generally, this restrictive measure is it's a good initiative, just like the Anchors Borrower program. It's a means for us to conserve our foreign external outflows, for us to conserve our foreign external reserves, for us to conserve our external reserves. So this is a time for us to look beyond what is currently in front of us. By the time the restriction continues and the access to foreign exchange is limited, thankfully we have the 6 giants of FMCG. That the 6 companies that are granted access to the forex and the 6 giants of the industry, that is Wamco, Promasido, and the like. So by the time they have access to this, in the short run, supply to this in this industry will be affected. However, because the 6 companies are giants of the industry, they won't feel so much impact depending on the duration of the restriction. So Nigeria towing this path is going to be a good metric for us.
Thank you, Aisat, for speaking with us on the program. Aisat Dawood is one of the research analysts at the financial derivatives company. In other stories now, Tunisia has made plans to invite the International Monetary Fund in March to discuss a 6th review of its IMF loan program. Tunisia struck a deal with the IMF in December 2016 for a $2.8 billion loan package to overhaul its economy, including steps to cut chronic deficits and trim bloated public services. The IMF disbursed the current program's last loan tranche worth $247 million in June last year. Since then, negotiations on the sixth review of the deal have been stalled, and that's due to a political crisis. A sixth review deal with the IMF would allow Tunisia to mobilize financial resources for 2020 and obtain loans from other lenders, including the World Bank, the African Development Bank, and the European Union. South Africa's heavily indebted sugar producer, Tongaat Hulett, has entered negotiations on the potential sale of Tongaat Hulett starch. The agriculture and agri-processing company is seeking to cut debts through selling assets, cutting jobs, raising equity, and other measures aimed at boosting cash flow. Tongaat said in January that it had already met its first debt reduction milestone of 500 million rand, or $33.5 million, as defined in its refinancing agreement with funders, and asset disposal assessments were at an advanced stage. Tongaat Starch is Africa's largest producer of starch, glucose, and related products. Its 5 mills make ingredients for alcoholic drinks, baking, jams, canned food, and other products. More news now. BP has written to Algeria to express its interest in investing in its oil sector, but has not made any request to sell its shares in the gas plant. Last week, industry sources said BP plc was seeking buyers for its stake in the gas plant deep in the Sahara Desert after recent talks on its sale to Russian oil giant Rosneft failed. But Algeria's energy ministry insists that the company did not send any request to sell its shares in the Amenas plant. BP hopes to raise around $2 billion from the sale of its 45.89% stake in the gas plant. The sale is part of a $15 billion disposal program BP is targeting by the middle of 2021. Let's check the prices of crude oil now. There is further for a third day on expectations that major producers are likely to enact deeper output cuts to offset the slump in demand caused by the coronavirus outbreak in China, the world's second largest crude consumer. Brent crude was up 0.3% at $55.96 a barrel, and U.S. crude futures rose 0.6% to $51.46 a barrel. Yesterday, OPEC lowered its 2020 forecast for demand for the group's crude by 200,000 barrels per day. Of course, that prompted expectations that OPEC Plus will enact the cuts when the group meets next, possibly as early as this month. And that's our show today. Thank you for watching. I am BC Adebayo.